Hey everyone, and welcome back. Get ready for some major news that could completely shake up your retirement savings. For years, your 401k probably felt a bit boring. Mostly stocks, some bonds, maybe a little cash. But that's all about to change. President Trump just signed a groundbreaking executive order that's opening the floodgates for a whole new world of investments to enter your retirement account. We're talking about things like private companies, real estate, and even digital currencies like Bitcoin. This isn't just a minor tweak, it's a huge potential shift that could redefine how millions of Americans save for their golden years. So, what exactly are these alternative assets heading your way? Think beyond your typical stock market investments. We're talking about private companies, private equity. These are businesses not traded on public exchanges. Think early-stage startups or established companies that just prefer to stay private rather than going public. Private loans, private credit. This involves directly lending money to companies or individuals outside of traditional banking systems. Real estate. This includes direct or indirect investments in properties. Digital currencies. Yes, things like Bitcoin, Ethereum, and other well-known cryptocurrencies. And even commodities and strategies that help provide lifetime income in retirement. Now, why is this happening and why is it such a big deal? For a long time, investments in these areas were mostly reserved for the super rich, those with over $1 million in liquid assets, and massive institutional investors like big pension funds and university endowments. Average Americans, saving through their 401ks, were largely shut out. Supporters of this order say it's about democratizing investing, giving everyone a shot at what could be higher returns and a broader way to diversify their money. Consider this. Private investments have historically delivered some impressive gains. Some analyses show they've actually outpaced the broader stock market by a couple of percentage points, often returning around 13% annually after fees compared to the stock market's average of about 11% over the same period. Plus, the investment landscape has changed dramatically. The number of publicly traded U.S. companies has been cut in half since the mid-1990s. Many companies are now choosing to stay private for much longer, meaning a lot of their growth happens before they ever hit the public market. This order could unlock those previously inaccessible growth opportunities for your retirement account. Now, let's talk about the digital currencies world. It's buzzing. Bitcoin's price has been on a tear, recently soaring to over $116,000, and it's nearly doubled since the last presidential election. Many crypto enthusiasts see this as a watershed moment, arguing it was inevitable for Bitcoin to make its way into American retirement plans. It certainly expands access and could encourage more long-term investing in digital assets, pushing them further into the mainstream of our financial system. But hold on, here's the crucial part. These investments come with significant catches, and they might not be for everyone. First, they are typically far more expensive. Forget those super low fees you see with typical index funds, which might charge less than 0.1% a year. Private market funds can start with a 1% annual management fee, plus additional incentive fees that can be even higher if the fund performs well. These extra costs can really eat into your overall returns. Critics warn that the promise of higher returns might be illusory once you factor in these hefty fees. Second, they are much less liquid. That's a fancy way of saying they're significantly harder to sell quickly and get your cash out. With public stocks or bonds, you can usually sell and get your money in a day. With private investments, your money might be tied up for months or even years because there isn't a readily available public market to sell them. This could be a real problem if you suddenly need access to your funds or if you want to shift your investments. Third, transparency is often lower. Public companies have strict regulations and disclosure requirements, so you generally know exactly what's going on financially. Private companies don't have the same stringent rules. This means it can be tough to really understand what you're investing in, how much it's worth, or who's determining its value. This lack of clarity makes it really hard to compare their performance effectively. And finally, for digital currencies, volatility is a huge factor. It's not uncommon for Bitcoin or Ethereum to jump or drop by 10% or more in a single day. While they offer high potential upside, they also come with major downside risk. Seeing your retirement savings swing wildly day to day could be incredibly stressful and destructive for your long-term plans. Because of these inherent risks and complexities, most experts don't expect you to be able to just throw 20% of your 401k into a standalone speculative crypto fund. Instead, these new options will likely be tucked into things like managed accounts or target date funds. These are professionally managed funds that typically hold only a small percentage, perhaps 5 to 20% in alternative assets, blending them with more traditional, stable investments. This approach aims to provide some diversification benefits while attempting to manage the higher risks. Now, before you get too excited or too worried, it's important to understand this isn't happening overnight. This executive order is really a directive to federal agencies, especially the Labor Department and the Securities and Exchange Commission, to revisit their rules and make it easier for these investments to be included in 401ks. This process takes time, likely many months or even a couple of years for new regulations to be written and put into effect. Even once the rules are clearer, it's not a guarantee that your employer will offer these new options. Employers who sponsor 401k plans have a legal duty to act in your best interest. They have to carefully vet any new investment, consider the costs, the risks, and whether it's truly appropriate for their employees. This means they'll move slowly and cautiously. They're not obligated to offer these investments at all, and it's definitely not a one-size-fits-all situation when it comes to retirement plans. Some big players in the retirement world are already on board. Major asset managers like BlackRock and Empower are planning to launch new funds, possibly as early as next year, that will include a small allocation to these private investments. But other giants like Vanguard are taking a more reserved approach, focusing on educating investors about the risks and opportunities rather than rushing new products to market. You might also see a discussion about whether these new options will be opt-in, meaning you have to specifically choose them, or opt-out, meaning they're included unless you say no. Many financial experts believe people should have to actively choose these more complex investments. So, what should you do right now? Don't panic, but do stay informed. If these options become available in your 401k, talk to your financial advisor or the advisors associated with your plan. Understand the potential benefits and, more importantly, the risks. For many people, simply sticking to a diversified mix of low-cost stock and bond index funds might still be the best approach for a secure retirement. It's about figuring out what's right for your financial situation and risk tolerance. The bottom line is that President Trump's executive order signals a clear push to bring a wider range of investment options into your 401k, aiming to give everyday Americans access to potentially higher returns and more diversification. This could be a game changer for the retirement market, worth over $12 trillion. But it's also a move that comes with higher fees, less transparency, and more risk, especially with volatile digital currencies. The path forward will be slow and cautious, with regulators and employers weighing every step. Ultimately, it's about making smart choices for your own future. What do you think about these changes? Are you excited to potentially add private investments or crypto to your 401k? Or are you more cautious? Let me know in the comments below. If you found this video helpful, please give it a thumbs up. It really helps the channel. And if you want to stay on top of all the latest news impacting your money and retirement, make sure you subscribe and hit that notification bell so you don't miss any of my upcoming videos. Thanks for watching, and I'll see you next time.